Hello everybody, welcome back to a Chart Nerd technical analysis video. Today we will be discussing the likes of Velo. Now there are multiple bullish divergences that are forming here for Velo right at the local lows on key support. So right now I think the Velo is in the process of forming its bottom structure before pushing to the next leg up, and today's videos will be discussing those potentials, and if we are not to be forming such and we are looking for pullbacks, I will also be discussing further support levels to keep us all covered. So do stay tuned. Nothing that I say is financial advice. Let's dive in. So coming over to Velo on the daily time frame here, and this is where one of the divergences are starting to play out. So you'll notice that we have lower lows in the price, but we have higher lows in the RSI. Now this is called a regular bullish divergence. Now at the same time, we also have the Stoch RSI that is back down in the floor, and these are the sort of oversold areas that you want to look out for. So it doesn't necessarily have to mark the exact bottom, but when you're at these peaks in the Stoch RSI, if you look here in the peak on the 16th of January, we was at the 0.038 high. This would have been a good time to potentially take something off of the board before a correction, and then we had this sort of rollover into the floor. Now it took from the 20th of January on the daily to the 2nd of February to initially put in the full correction, and we did stay in this oversold territory for a while, but eventually the Stoch RSI started to pick up, and so did the price once we came off the 0.013 floor. Now again, what happened is we then rallied up but put in a lower high to this high here, but at the same time we put in a high in the Stoch RSI which indicate overbought area, and then we started rolling over. Now in this roll down, this is where we're putting in that sort of higher low structure, which has enabled the lower low to form, but the higher low to form in the RSI. So this is something called a regular bullish divergence with a extra bit of confluence, having the Stoch RSI in the floor. So if we look at a cheat sheet here, what we've got is a regular bullish divergence is when you've got lower lows in the price, but you have higher lows in the indicator. Now going back to Velo, you've got lower lows in the price and we've got higher lows in the indicator. And again, at the same time, the Stoch RSI on the daily is now back in oversold territory. So this is a very interesting structure. And I think that what's occurred here is we had this previous 0.022 support. So this was support for such a long time and led to this impulsive move, which took us up to 0.038. And then we eventually came down and lost that support and turned it into resistance coming into the end of January. Now at this point, I think this is where since that rejection, Velo has been building this sort of base, and I said from this 0.013 low we could come up and run into resistance here, turn this support, previous support at 0.022 into resistance, and then come back for a higher low formation, attempting to fill in this 0.013 wick. And as exactly that has come into fruition right now, and it looks like as long as this 0.013 wick holds, no matter how far these candle closes come back, I think this divergence could potentially just start getting stronger over time, unless of course we start putting in lower lows in the RSI and lower lows in the price. This would invalidate the formation of this divergence, but for now we do have the higher low structure in the RSI and we do have lower lows in the price, which is indicating a bullish divergence, again tying up with the Stoch RSI that's in the floor. So what we're waiting for right now is confirmation and starting to get a push back up and at least trying to get back to 0.022. There will be key levels of resistance along the way that do need to be reclaimed. So for example, going from this wick low that we had a couple of days ago on the 28th of February, right now we're trying to work back to the 0.022 retest that we had on the 9th of February. So we came from 0.013 and pushed up to 0.022, but initially got rejected, and this is where we've started the higher low pullback that we're looking for on this 0.013 wick retracement. So right now we've got key resistance above at 0.017 and 18 that need to be reclaimed in order to start seeing this bullish divergence come into fruition. And if this is the low right here, and this is the pullback, the final pullback that we needed to create this sort of divergence on the daily, again, this is where we have to start seeing or witnessing Velo literally starting to pick up the pace here and getting back above these key resistance levels and pushing back onto 0.022, which again is the key level of resistance, by the way, that we need to reclaim. So in the near short term, if we are to start seeing seeing relief, we have to reclaim 1.7 and 1.8, okay? And in the near sort of midterm, short to midterm, we need to start clearing 2.2. These are the key levels of resistance right here that Velo is facing right now in order to get that next leg up from this potential bullish divergence that is formed here. So yeah, key resistance levels to break, 1.7, 1.8, and then overall 2.2. They're the key levels we want to see if we start seeing some positive reaction from this bullish divergence. Now again, you've got the lower lows in price, the higher lows in the RSI, and the Stoch RSI is entering oversold territory. Three sort of signals here giving confidence that we could be potentially building this base before the next leg up. Now, if we zoom out to the weekly, we even have the potential of I wouldn't say it's a strong bullish divergence right now, but if we analyze the RSI and the price here at the same time too, and if we go from these candle closes to the candle closes we have now, again, tonight's close is quite important. I think closing above 0.016/7 is quite important here. But if you look at this, you've got higher lows in the price, okay, in these candles so far, and in the RSI, we also have a potential lower lows too. So we're forming, this is a hidden bullish divergence. So if we go to the cheat sheet, a hidden one is where you've got higher lows in the price, but you've got lower lows in the RSI. So on the daily, we're forming a regular bullish divergence, okay, but on the weekly, we're forming a hidden because we've got higher lows in candle closes in price, but lower lows on the indicator, right? So going back, you've got higher lows in candle price, but we're starting to get these lower lows on the indicator. Now, again, we also have the Stoch RSI that's oversold in oversold territory. Now, if we analyze where the previous sort of area for this oversold territory was on the weekly, we come back to sort of June, July of last year in 2024. Now, scoping back up to the price, you will see that the price was in the floor at these times, and this led, okay, the last time we was this oversold, the last time we was this oversold in July 2024, this led to a massive, I think it was about a 4x. Yeah, just over a 4x move, okay, from the last time that Velo was in the floor in the Stoch RSI at these levels. Now, we have to understand that RSI itself is also at similar reset levels compared to where we was in July of 2024. So we are forming bullish divergences here on multiple time frames. On the daily, we've got the regular, and on the weekly, we've got the hidden. Okay, again, I just showed you, you've got higher lows in price, but we have these slightly lower lows that are forming in the RSI, and the Stoch RSI is in the floor. So we are forming multiple bullish divergences here, guys. This is closer to a bottom than anything, okay? And again, nothing that I say is financial advice. We could still come back, potentially fill this wick in, and maybe even pull back lower than that. But what I think it's going to do is create an even larger bullish divergence, an even larger spring that would entail in a more macro impulsive move. The larger the spring, the larger the breakout, okay? That's the way we're looking at it. Now, how I'm analyzing this is potentially a 1, this is a 2, this was a 3, we had a very shallow wave 4, and right now we're just forming that low sort of that wave 5, and whether it does draw back and pull back any lower than this 0.013, it is a potential, but right now I think we are coming back and forming this candle close on a wave 5 somewhere before getting that continuation and then looking to start the next move out and the next leg out of the woods here. So there's a lot to monitor, and this doesn't necessarily have to mean that the low is in right now. These are just indications that we are forming bullish structural signals, and that I think a bottom is in the middle of forming or in the midst of forming here for Velo before the next impulsive move. Now, we all speak about how Velo loves ABC corrections, and I have said before that this could just be an expanded ABC flat where this 0.013 is the local low. Now, you would say again that the B wave shouldn't overtake the sort of start of the A wave, but this is why it's called an expanded flat, because the A to B is an expansion above the A wave start point. So we've got the ABC correction, and even if we do come over and sort of have to drag this to the final sort of candle close, right now you could say this was the C wave, and all you've got here is the potential C wave structure that's forming from the B wave, and this wasn't necessarily the C wave low. We're going to go off the candle closes, so tonight's candle close is important. But Velo loves an ABC correction. We had another very similar expanded flat correction here, for example, right? We had the A wave, the B, and then the C. And again, I'm going to go off this one using wick base, but A, B, C. these are all bottoming structures. If we look back at the 0.007, this was a double bottom, okay, and this was a W shape, higher low, double bottom before breaking out. And what initially happened was we came back for a retest on support. So we had the double bottom, we broke out, and then we had an A, B, C, back to the support line of the previous double bottom resistance, and then we melted out. Okay, so it's simple going up the stairs, guys. Okay, you form the structure below, you break out. You form the corrective structure, you break out. We form the corrective structure, we break out, so on and so forth. This is bullish price action. I've said it in so many videos. The fact that we have a local low, a higher low, you've got a low, a high. You've got a higher low, you've got higher highs. You've got higher lows. The next thing that's to come is higher high. This is a macro bullish structure climbing up the stairs, and each of these corrections have offered previous opportunity ever since we actually came back from the 0.028 high in May 2024. These corrections have all offered opportunity. Now, they never feel like it. But again, coming back to the indicators, they help give you a clearer picture. The RSI was in the floor. The Stoch RSI was in the floor. The price was in the floor. What came next was a turn up in the Stoch RSI, a turn up in the RSI, and a turn up in the price. And eventually this led to the macro impulsive. Okay, so even here, 1, 2, 3, 4, 5 waves pullback in the RSI. Okay, and this is where we had the A, B, C correction. Now we've had 1, 2, 3, 4, 5. Very similar to the previous correction. 5 waves in the RSI, and in the price we've got 1, 2, 3, 4, 5. Okay, so this looks pretty much identical to the previous correction. And in fact, the Stoch RSI is even more oversold. So this is really, really an optimal opportunity in my eyes. And the charts, are telling me that the low here, is nearly in for Velo. Again, I don't want to pick the bottom because you get smelly fingers, okay? Trying to exactly pick the right bottom. People say to me, what's the exact low? I don't know, okay? I'm just showing you here, guys, okay, that the potentials of a low are very, very close. And this 0.013 didn't exactly identify it straight off the bat. You don't want to just think, okay, we've had the correction, now we're just going to melt up into space. No, we want to hover around here, build this base, sort of work up some structure around this sort of 0.013 area, and then go for the breakout. Look, the double bottom is a prime example here, guys. Look, we came down to 0.007, rallied up. People thought that we was going for it then, but we came back for a higher low and then went for the break. Okay, like we've just had the 0.013. We've come up. People thought the break was continuing, but no, we're coming back right now for that higher low. So we're literally just forming this higher low structure, it looks like, underneath a key level of previous support that's now resistance, and then hopefully we could just start getting the breakout here coming into the later periods of March. Okay, so again, I'm not here to try and pick the exact bottom, guys, but it looks like after these 1, 2, 3, 4, 5 waves corrections, and again in the RSI you've got 1, 2, 3, 4, 5 wave move, and the Stoch RSI on the weeklies in the floor, whilst you're forming a hidden bullish divergence, it looks close. So today, that's all I really kind of wanted to touch base on. If I get rid of the indicators quickly here and just study the price a little bit more, and if we do come back any deeper than this 0.013, we do have potential targets here. So I think right now we have filled in about 61% of this wick, which is a great area. In fact, we've actually come down to the 0.786. So right now the 0.786 at 0.014 is a key level of support. Failing to hold that, okay, and this, again, it's a potential, guys. Okay, it's a potential. Again, these signals are forming, they're bullish signals, but it doesn't have to identify the low right this second. And I think watching Bitcoin is a very good thing to do here. If Bitcoin does come back and pull back to the low 70s and continue to shake people out, I think this is where we may come back and actually put in a lower low than this 0.013. But I would still be macro bullish because the indicators are already telling me that bullish divergences are forming, and this is what we want to confirm a local bottom. So if we are to start pulling back further, and say for example we close below 0.786 and we close below the 1 fib, then all this potentially could be is the further fifth extension. So you got wave 1, wave 2, this is wave 3, wave 4, and then potentially this is a wave 5 that could stoop down to 0.011, which was also the key level of support in the last correction on this ABC correction. So we could be coming back down for some sort of macro double bottom on November the 24th support if we come back any further in this fifth wave. Now, again, I'm not trying to say it's going to happen. I'm just giving you the scenarios and potentials if we fail to hold this low within creating this bullish divergence, and this isn't the low end yet. Okay, we have to consider all potentials. So right now, key support is 0.014. Lose that, you've got the 1 fib to actually fill this wick in from early February. And if we lose that and come back any further, which I think would really scare people, again, I think it would be the confirmation of this wave 5 back down to the 1272 at 0.011, retesting this sort of local low from November, which is a key level of support, and then going for the breakout. Okay, it's a potential, and we must cover that. But right now, we are forming those macro bullish signals. We've got the higher lows that are, the lower lows in price on the daily. We've got the higher lows in the RSI, and the Stoch RSI is oversold. Now, if we go back to the weekly, as I was saying here, you've got lower lows. You've got lower lows in the RSI, but you've got higher lows in the price. This is a hidden bullish divergence that's also forming. So I hope you've enjoyed today's content, guys. From Chartner TA, take care. Peace out.